you monitoring chat, Josh?
Yeah, I'll keep an eye on chat, Steve. So, all right. Well, good afternoon, everyone. Thank you for attending the Roads and Transport Directorate's May 25 webinar. The subject for this month's webinar is on early results from our road asset benchmarking project. For those who aren't aware, that's a long-running project we've been conducting since about 2006. And every 2 to 3 years, we do a survey of the condition of the road and bridge assets across the state and provide that information in a fairly detailed report. So the two reports are due out next week. We're just putting the finishing touches on them. But today we've got Steve Verity, who's the author of both of those reports from the IPWEA National Office, and Steve will be running through a bit of an overview of some of the results. This obviously isn't everything. There's a lot more in it. And please do ask any questions as we're going through. Steve can probably speak to this for multiple hours, but we've only given him 1 hour today. So, but we have the function through both the chat and the Q&A in this webinar for you to put your comments and questions in there. So please do put them through as we, throughout this presentation, and then we'll do sort of a dedicated Q&A section at the end of the presentation. So, Steve, I might pass over to you without further ado.
Yeah, thank you, Josh, and thank you, IPWEA New South Wales and ACT Division, and more specifically, the Roads and Transport Directorate for providing everyone, not only in the room today, but the local government sector, more of a voice around the infrastructure needs of the road network that our communities enjoy on a daily basis. So when we're talking about the benchmarking report, and like any other benchmarking study, the road asset benchmarking project is a structured process of data collection, which, when conducted on a regular ongoing basis, particularly around the performance metrics, the management processes and practices, we can then not only give a point in time reference to how well we're doing, but also compare it to others across the state. And it does identify areas for improvements and opportunities to adopt best practices. So the New South Wales Road Asset Benchmarking Project and the subsequent reports that flow from the regular ongoing data collection not only provide that point in time reference, but also gives us insights on trends over time around the value and performance of the regional and local roads and bridges managed by every New South Wales council. And it also gives us the opportunity to estimate the funding required to at least maintain current levels of service. And I'll talk to that particular aspect later on during today's webinar. It also gives us opportunity to report management trends that support the sustainability of the road and bridge infrastructure. That is, as we all know, essential to the New South Wales economy on many, many fronts. So, as Josh said in the introduction, the project and the data collection, the regular data collection, has been happening since 2006. So we've got close to 20 years of trend data, which I'll be sharing with you today and give you a bit more insight to the value proposition of not only this particular project, but the informed evidence base about how well we're doing and what additional money, if we need it, and quantifying how much we need if we do need it. And it's something you can probably take back, even though it's at a statewide level reporting, there is reporting in the documents for each of the regions across the state as well. So, and the same principles that are applied in the results can be also applied to your own council as well. So to see how well you're tracking compared to others. So what is the data that we're using as part of the project, and where is it sourced from? So the main source of data input is in the IPWEA Plus knowledge management system. So there's a screenshot of that on the slide in front of you, which gives you the entry portal to the data collection, where you can not only view past and current data that you've provided in the past, it gives you the opportunity to update that data for future reports as well. And other sources of data that we do use to collate the findings in the report come from the New South Wales Office of Local Government Time Series data. So that's an open source data platform. Everyone has access to that from the OLG website, and we've accessed some of that data to supplement the value of the benchmarking report. In addition, we've aligned it to the Australian Local Government Association's National State of the Assets report. So for those of you who are not familiar with that particular initiative, it's another benchmarking report that focuses on the state of the assets, and not just roads, it's all other major asset categories that councils have responsibility for. It collects the valuation data, the performance data in terms of what is in good, fair, poor condition, function, capacity, and also the valuation numbers for each of the major asset categories. And for those councils who have other priorities and didn't manage to update their data, where the numbers are available or needed, we have sourced that information from those respective financial statements from the council's website for the last reporting period. So all the data for this 2025 report is based on financial year ending June last year, so the 23-24 financial year. It actually takes us close to 12 months to actually process all that data and validate it, analyse it, and report in the two reports. Maybe I didn't mention that there was actually more than one report. There's actually two reports. There's a road-specific report that does incorporate bridges, and we have a standalone bridge management report. So for those who have an interest in how bridges are managed across the state by local councils, the bridge management report is an extension of the former timber bridge management report that we used to collate for the Roads and Transport Directorate. So it gives a more consolidated insight to the bridge structures, which, as we all know, have a high consequence of failure when things go wrong with that particular asset class. So it's a bit more nuanced and a bit more sort of a deep dive into the management of bridge structures. But the road management report itself covers all road network assets, so sealed and unsealed roads, and the concrete and timber bridges. So when we're looking at the actual data types that are included in the report, there's 6 broad areas of data collection. So obviously we need to know the inventory, that is the length, the kilometres of sealed and unsealed roads. How many concrete and timber bridges do you have? So they're the basic questions, and you should would no doubt know the answers to those questions. So just that information in itself gives us insight to whether the kilometres is increasing over time, and same with the number of bridges, but also with the types of assets, whether they're sealed or unsealed. We can see the growth rate in sealed roads as compared to unsealed roads, for example. So that's the first data type that we collect, and with that data we've actually validated it again with the OLG comparative reports, time series data. So make sure there's alignment in that space, but also with the national local roads data system as well. So there is a national database on for each of the state and territories that collects and reports the length of sealed and unsealed roads and the number of concrete and timber bridges. The second dot point there collects expenditure data, and I'll talk a little bit more about what those numbers actually are in the most recent report, and the expenditure types. So it's not just operations and maintenance. We're actually looking at the split on the CapEx side as well. So how much has been spent on renewal of our sealed and unsealed roads and our concrete and timber bridges, but also the CapEx investment on upgrading existing assets and the acquisition of new ones, including the consideration of the value of assets that are coming online free of charge from developers. So there's a reasonable percentage of our portfolio that increases year on year due to new assets coming online at free of cost, which comes with an ongoing burden of operational costs once we do commission those assets onto the books. So that's the expenditure component, and equally as important is the valuation. So ensuring your unit rates, your useful lives are kept up to date, again, for each of the major asset classes that are reported in the report, but also what their fair value is. So there's regular ongoing valuations, as we know. What are those numbers? And also the written down number, and also the annual depreciation for each of those major asset classes. So that gives us insight in if we're maintaining capital in the value of our assets, and if that's increasing or decreasing or staying the same. They're important considerations when we are considering in our asset management plans whether we need more money invested in certain areas or certain asset classes. And as part of that question around, do we need more money, and if so, how much? Then we need to compare it against a baseline consideration around what are the annual life cycle costs to operate and maintain and replace existing assets. So that's done through the data collection around unit costs and useful lives, again, for each of the sealed, unsealed concrete and timber bridges. And finally, there are questions in the portal around your workforce capability and training needs. So that's an important aspect for IPWEA to understand what those gaps are, and helps configure the training that we offer to our members and to the public works sector more broadly. So those 6 data types feed into the 2 reports that I've mentioned previously. So how is participation going? So I'd just like to sort of reflect on past trend here on the participation rates. So at for the close of the reporting period last year for this report, we had 114 councils. That's around about 89% of you submitted either new data or updated existing data that was attached to your council. So that means there was 14 councils, or 11% of you that did not actually participate, which is, on balance, 89% is still a good sample size to help us extrapolate to 100%, the findings and the results in the report. And you can see from this trend of participation since 2005 to about 2017, participation rates consistently exceeded 90%. There was a sharp decline 2019 of around 20% to that 70% participation rate, and that could be attributed to not only the pandemic and other priorities, but also the amalgamations and mergers that were happening around about that time as well. So, but since then, there's been steady, I guess, recovery in engagement and participation, which we're very thankful and appreciative of your efforts and being involved. And as I said before, where there were gaps, because not every council of that, not everyone of that 89% who participated completed all the data inputs that were requested. So where there were gaps, we cross-checked with the ALGA National State of the Assets report. We cross-checked with the National Local Roads Data System, and also the Office of Local Government Grants Commission as well. So we just didn't want to make sure there was any sort of gaps that would lessen the confidence and the credibility in the findings. So either way, 89% is still quite a high participation rate, and it does underscore Council's ongoing commitment to improving road and bridge asset management practices. And on behalf of IPWEA, New South Wales and ACT Division, and also Local Government New South Wales, who are partners of this particular project, do thank you all for spending the time and effort in sourcing the data from your internal management systems to contribute to this important initiative. So, and I just want to put a special shout out to these 14 councils. So hands up, you can use the reaction function or the raise your hand function in Teams. If you're from one of these councils, I just want to put a special shout out. I'm not sure, Josh, if there's anyone there from these councils in the group today. You might have recognise a few names, perhaps.
I'll let them self-nominate, Steve.
And the only reason why they get a special mention, because they actually these 14 generated, I guess, additional work for not only for me, but for Josh and for William and the New South Wales office, because these are the ones that failed to participate. So in the most recent round. So not just pointing the finger, but just making a special note that even though you didn't participate, your data that was sourced elsewhere is probably of a much higher confidence, because it's been signed off by audit, because we've sourced it from the financial reports. So even though they couldn't find time to participate, we have included the relevant data needed for each of the performance measures that are reported on the reports from these councils' own internal and publicly available documents. So yeah, so if you're from one of those councils, thank you. So I mentioned the performance measures. So since 2006, the data has been consistently collected. So it's we ask the same questions each time, and they are validated for inaccuracies, whether they're in the realms of reasonableness, not sitting as outliers on the standard deviation and normal distribution curves from all the 128 councils in the mix. And when we've done that validation exercise, then we actually report against each of the measures in the report. And I'll talk to you what those measures actually are, but they're actually grouped in three broad areas. So we can, as part of the concluding statements, we can give some insight to how well we are managing the road network. And then we can focus on how the road network is performing in terms of condition, function, capacity metrics. And then the old chestnut around financial sustainability. What is that? How do we measure it? And how well are we actually achieving financial sustainability? So for LG New South Wales and IPWEA, we know financial sustainability is quite a topical matter and always raises its head in elected members and advocacy groups as well. So from an engineering perspective, it's about, well, do we have enough funds available to deliver on the services that we've promised? And where, if there are gaps, what is the risks attached to that as well? So all the metrics are grouped up into these three broad areas, which we can formulate a response to inform future decisions around policy directives. Could be reform, it could be better training for the engineers and the practitioners in each of the councils. So when we're talking about road management practices, there's three specific measures. First one being, do you use international best practice? So, i.e. the International Infrastructure Management Manual, which gives plenty of guidance on how to apply the international standards for asset management, known as the 55,000, and also 31,000, which is attached to risk. So we asked the question to what degree are you actually using that manual in your organisation? And that helps us, I guess, provide some insight on how well we're managing our networks from a management perspective. The second metric there we use is the road asset management plan. Do you have one? Is it up to date, or don't you have one? And likewise, do you have a risk management system for your road network? So these three broad questions are asked in the benchmarking portal, and then we report on each of these measures. So what were the results in the road management capability in this most recent round? You can see here from the trend chart, I've just used one of the three measures for management capability, and I've just sort of called out the adoption of the road asset management plan since 2005. So you can see there, with the IIMM as well, there's been a strong shift towards adopting not only the IIMM, but the adoption of road asset management plan. So, since 2005, back in that era, there was lots of reform happening in New South Wales local government, and the need for the IPWEA to actually have a policy statement on asset management, backed up with a strategy that looks at your level of maturity and where you need to be and how you're going to get there, and also an asset management plan for a minimum 10 years for each of your major asset classes, including roads. So you can see here there was a strong uptake in the up till about 2012, but since then it's somewhat plateaued around about that 80% mark thereabouts. So there's 1 in 4 councils who either don't have a road asset management plan, or if they do, it's out of date. So that's a message in itself around the management capability. Similar results for the risk management systems for managing the road network risks in local government as well. So around about 1 in 4, again, still operate without formal risk controls in their organisation for a variety of reasons. The regional split on these results can be found in the benchmarking report. So as Josh said at the start, they are soon to be released, but you're fortunate enough as part of this event to get some insight to what the statewide results are. So that's the road network management aspects. So when we look at the road network performance itself, the 3 core metrics, similar to the National State of the Assets report, measure what proportion of your asset portfolio is in good, fair, poor condition, function, and capacity. So these metrics alone individually, so let's focus on condition. That's most of you have got reasonably good condition data or knowledge of how well your road network is performing in a condition sense. That basically asks the question, what is the quality of your road network? What percentage is in good, fair, and poor state of repair? And it's a mandatory reporting measure in your financial statements on the report on infrastructure. So it's essentially the same data. It helps drive your maintenance and CapEx renewal programs, and it gives you a bit of insight to estimating remaining life of your existing road network. The remaining two measures focus on function and capacity. So both of which drive insight to your CapEx upgrade and new programs. So where do we need new assets to meet demand? Where do we need to upgrade existing assets because operating circumstances have changed? So knowledge of function and capacity helps us understand what those CapEx needs are and what's in good, fair, poor function and capacity. So how did we actually perform? So you can see here we've got the trend chart for each of the major asset classes. This is the trend chart for condition, but in the dot points you can see not only condition, which poor to very poor, those red bits, is collectively around about the $6.3 billion mark. So that's quite a big number. Doesn't mean it's high risk. It just says that, councils are telling us that there's $6.3 billion worth of stuff out there across sealed, unsealed, concrete, steel and timber bridges that are in poor condition. Whether we need to rush out today and fix them all, that's a totally different question, because that's all based on priorities and risk and affordability. So it's just a statement of fact. Similarly for function and capacity, hovering just above the $5 billion mark for each in poor function and capacity. So while some assets may be in very poor condition, doesn't mean they're in poor function and capacity. And similarly, for those that have poor function and capacity, doesn't mean they're in poor condition. So it's just different ways of slicing the narrative around, what's the state of our infrastructure assets? The trend chart I quite like. You can see where, yes, the majority of our assets are actually in good condition. The green bits, and they kind of ebb and flow since 2013. And you would expect, for example, concrete and steel bridges to be relatively good condition, because again, there's high consequence of failure if we have more of them in a very poor condition. So it just shows that we're probably, looking after our concrete bridges relatively well compared to timber bridges, where we've got a lot less in good condition and a lot more in very poor condition. The results are not all that dissimilar, or should I say the comparison between timber and concrete bridges for function and capacity as well. Again, all the detail, not only at a statewide level for each of these asset categories, it's also reported at a regional level in the road and bridge management reports in the appendices. So when you get your hands on the report, which will, correct me again, Josh, they should be out and available next week, is before Congress, is that correct?
Probably after Congress, Steve, but certainly next week is the aim.
Yeah, sure, no worries. So watch the space very soon. I'm sure Josh and the team will let every one of you know when those reports are available. So this just demonstrates regular, consistent data collection and reporting can help guide investment decisions down the track. So it helps in your asset management planning imperative around where we need to invest our scarce resources. And the third and final area of measurement was in the financial sustainability space, and we've actually got 6 metrics here. The first one looks at do you have an adopted long-term financial plan? And we ask the question, does that financial plan consider the life cycle cost projections, i.e. the timing and cash needed in the asset management plan. That's a very important metric because while it might be fine to have a financial plan that's forecast to deliver a surplus, it's not much use to us if we've still got a bunch of assets in poor condition that need investment. So it's absolutely critical the needs of the asset plan are actually considered in the ongoing review of the long-term financial plan. So those first two measures are absolutely critical in demonstrating not only financial sustainability, but we're doing that in a sustainable way in sync with our service objectives of the organisation. The remaining measures, the remaining four measures, focus on consumption. So, and also comparison to life cycle costs, and the last one there is surplus ratio. Do we have enough revenue to fund all the assets and the services that they deliver across the organisation? So essentially, by definition, financial sustainability looks at operating capacity in financial terms. Are we delivering a surplus on a rolling 3 to 5 year basis? If so, then we've got ample capacity to fund the things that we say that need to be funded. And even more so, even though we don't report on it in this report, if we've got increasing capacity to fund debt, then there's no reason why we should take on more debt to fund those nice shiny new projects and assets that community and elected members tend to allocate funds to. So all these metrics combined help inform the conversation about, well, do we have enough money, and if or don't we have enough money, and if not, where do we source it from, and where should it be invested? So all these measures, again, like the previous measures, report against each of the major asset categories. So how did we do in the financial sustainability space? So you can see here the strategic planning gap. And no surprise, this is quite a common trend here. That's most, there's a very small percentage that don't, but 95% of councils do have an adopted long-term financial plan. But interestingly, around about half of those who do align them with the forecast from the asset plan. So it's obviously it begs the question, there's misalignment for about half of the councils out there. So which plan are we actually following, the asset plan or the financial plan? I would hazard the guess that most councils are probably following the financial plan, because that's basically what's funded, and this is what we're actually going to do. So that's an interesting finding, and it's something that we've stressed the importance in the concluding remarks in the report. The second point there around the investment trends, so the consumption ratio, it's hovering around about 60% across all the major asset classes, but it does vary between the asset classes. So even though 67%, 2/3 service potential remaining says, that's in line with the national average, things are not too bad. It's actually been tracking fairly consistently at that level since 2006. So there hasn't been a great deal of movement in the consumption ratio over time. And again, these are averages, statewide averages, and they may be different in your particular organisation or in your region. Interestingly, though, for timber bridges, a much lower consumption ratio. That means we've consumed a lot more of that asset portfolio than the others. Doesn't mean that we're not managing them well. There's lots of money on the table for timber bridges, but there has been a gradual decline in the consumption ratio for timber bridges over time, even despite the additional funding to address the efficiency and performance of timber bridges. So that's something to keep an eye on. But if you've got an up-to-date asset management plan, it's not much of a concern if you have a low asset consumption ratio. And finally, the operating surplus ratio. Interestingly, and this is why I've included the chart here on this slide, and this is the statewide position on the operating surplus ratio, which compares revenue against operating expenses net of capital grants. So we net out the capital grants here because they fluctuate quite a lot, particularly when there's a natural disaster as well. So on average, across the states, the 128 councils have been running a surplus year on year at an average of 2.4%, which is, in financial sustainability, if you're coming from Treasury, that's a pretty good result. So it begs the question, if we do need more money, why do you need more money when you've been returning a surplus? So again, each year on year, that 2.4% has been as high as 9.8% and as low as minus 1.4%. But the annual average over the last 10 years is 2.4% in the black, which is a good result. So congratulations. But again, this is the average across the state. There will be some councils who have been returning an annual deficit, and some that have been returning a much higher surplus as well. So there's going to be a normal distribution curve on this particular measure. So just something to be mindful of, and something probably you need to check in your organisation. So in New South Wales, it's known as the operating performance ratio. It's the same calculation, and these results are actually sourced from the OLG time series data. So it's interesting findings when we're talking about financial sustainability. So I guess in summary, what are the key results, key findings, if you like? I spoke about the consumption ratio. So we are, as a collective, maintaining the capital value of our road and bridge assets. That consumption ratio hasn't moved a great deal. It's around about that 67% mark. So a third of the way through the portfolio consumption. Condition overall, you've seen the chart, generally improving. However, there's functional deficiencies in some places, particularly for unsealed roads, where it's been fairly flat and actually declining. So the proportion in poor function has actually been increasing over time. So that suggests the unsealed roads, they're probably experiencing more traffic, experiencing more demand to widen or possibly seal to meet that demand. So that's obviously a finding from the results and the data that you've provided. I've mentioned the planning capability around the half of councils integrating their trade-offs identified in the asset management plan into the financial planning process. So those two key functions in local government, finance and engineering, do need to collaborate and talk to each other about not only what the needs are, but where the finance and where the money's coming from in order to fund those needs. And are we having sensible conversations with our elected members and community about what those trade-offs are when we do bring down the annual budget? Because whether councils know it or not, when the budget's brought down, there's going to be an acceptance of a certain degree of risk. While it's nice to talk about the lovely things that we are funding, there's going to be a lot of things that we're not. And those things that we're not funding need to be understood in terms of their risk profile, because if things go wrong, everyone knows what those risks are. Do we have a management plan to actually address those? So that's something that's been identified in this report, and I think it's something that's been called out in previous reports as well. So it's an area that's probably in need of some I guess more firmer intervention, let me say. And that final point there around the ongoing shortfall in life cycle funding risks over the long-term sustainability. So as part of the report, we've actually modelled the expenditure numbers with the life cycle costs, and by doing so, we can see and compare where the gaps are for each of the major asset classes, and it gives us some insight over the long term about what those funding needs are to maintain at least current levels of service. So we've actually modelled that in the report, and the findings are quite interesting, let me say. So let me just step you through that process. We've got a little bit of time. So with the expenditure numbers, so overall, that total number, 2,929 million, or to use a shorter number, 2.9 billion, has been expended on the road and bridge network across New South Wales local government. That's these are numbers that you've provided, and again, just a shout out of congratulations, because we actually validated this number with what the Office of Local Government are reporting through their Grants Commission returns, and even though there was 121 councils that provided their expenditure numbers to OLG, that number collectively was around about 2.7 billion expended on the road and bridge network. So the 2.9, I guess, makes the shortfall for those who didn't respond to OLG. So, we've got confidence in this level of investment last financial year across the New South Wales local government road and bridge network. What OLG don't collect, but what we do collect as part of the benchmarking project, is the split not only across the asset categories, but also the life cycle activities. So maintenance, renewal, upgrade, new. So you can see those numbers there. I'm not going to go through those in any detail. You can see we're spending more on renewal than upgrade new last financial year. That's an interesting observation. So that's just something to be mindful of, but there may be some variations in how those numbers are collected or reported, but just something you can see on the CapEx side. It's around about 3 times what we're investing in maintenance. So interesting numbers, and this feeds into the model. And I might just add as well, in addition to the 2.9, there's around about, what was it, about I think just under $1 billion, I think 920 odd million. So 920, you can see on the chart, that was invested on upgrade new. So that's what councils invested. But there's around about 300 million or so that is contributed by developers. So about 0.4% of the replacement cost of the network is attributed to assets acquired free of charge from developers. So as part of the model, we need to factor in those additional assets that we're getting free of charge, because as you all know, that impacts future operations and maintenance in the operating budget. So as part of the model, we looked at this 2.9 plus the 300 million in donated assets, and compared that to the life cycle costs for things that we do in the business to maintain and replace our assets that provide services. So as part of the questions in the survey, for each of the key life cycle activities, and this is just one, this is the local road resurfacing question. So what is the average renewal cost per kilometre to resurface your sealed road network? So contrary to what some thought it was what we actually spent. So no, we're not asking what you spent. This is what the average renewal cost is. So for example, if the engineer came into your office, or the mayor came into your office and said, tell me what I need to know what the average cost is to resurface the road network. You're expected to know what that number is. And no surprise, we would get a spread of numbers in response, because people are operating in different locations around the state. There's different costs attributed to applying, the same treatment, because transportation needs and sourcing gravel, etc., all factors into the average cost per kilometre. So across your sealed road network, we asked the question, what is the average cost to resurface the road network? So here's the spread of the number of councils that's anywhere between 20k per kilometre to $80,000 per kilometre. Now, I will make the comment here, because this was coming through in the data. There was some quite significant outliers as part of the data returns, and we did go back to a number of those councils. So shout out to William in the office. So you probably got a call from William and say, well, look, can you revisit some of these estimates, because they're well outside the normal range. There may be a good reason for that, or some were just, they put too many zeros on the end of the number, perhaps. So this is, I guess, goes back to the credibility of the reporting, and thinking about, what the data request actually is as well. So as a result, we did have to trim out some of those outliers just to, I guess, narrow the standard deviation on this distribution of councils that provided their renewal costs. So we did this for not only resurfacing, we did it for pavement rehabs, resheets, we did it for timbered deck resurfacing, and also for concrete deck replacement as well. So again, all these results tables of data by all the regions can be found in the benchmarking report when that's released. So along with renewal cost distribution, we also looked at the useful life distribution. Again, I've just stuck with local sealed roads here. So you can see the majority of councils are saying anywhere between 20 and 25 years for the sealed surface for useful life. Now, being an engineer myself, that's a little bit of a concern. Arguably past the tipping point for some roads, depending on what that type of bitumen and surface treatment you've got on your sealed road network. So we're running pretty close to the line here, to that sort of point of rapid deterioration if we're not intervening less than on a 25-year cycle. So some are saying up to 35 years in some instances. So there'll be some impact on the level of service, no doubt, if you are in that sort of 30 to 35 year turnaround for your sealed roads. That might be the sad reality for some of you. Some of you are turning around a lot quicker, which is great. Optimizes life cycle costs, reduces maintenance, etc., etc. So, but in the main, most are between that 15 to 25 year. So interesting observation. And again, we did have to trim some out here as part of the final report through the validation exercise. So just interesting findings. So with average costs, average useful lives, we can then develop a life cycle model and compare it to those expenditure numbers. So that 2.9 that was invested across each of the life cycle activities, we can now develop a model against the life cycle costs, which were collectively around about 3.1 billion on an annual average. You can see a slight escalation in the operations and maintenance, because that's the red and green coloured bars there you can see on the chart. That's the consequence of all those orange assets. So that's the upgrade new and contributed assets, all combining to an increase in future OPEX over time. So if the budget stays at 2.9 billion as it did last year with no real increase for operations, maintenance and CapEx activities, then the annual average shortfall has been estimated around about $164 million. That's an annual average shortfall in funding. So call it a backlog, call it whatever you like. It's I guess, an identification with some form of evidence based on your data statewide that shows us that we've got a shortfall in funding to at least deliver current levels of service, this order of investment that we've done in the past. So that's a nice little advocacy angle to, I guess, reallocate perhaps existing funding sources to other asset categories in the organisations to the road network to demonstrate that we do need a slightly more funding allocation to our existing assets in the road and bridge network. So I'll let you have a think about that, and that may be something you might want to consider an approach to your own council road network as well as part of the development of your life cycle model in your asset plan. So what are the recos from the report, the two reports? No surprise, strengthening your asset and financial integration by aligning long-term financial plans with the asset plans, and fully incorporate those service, cost and risk trade-offs. We need to implement consistent long-term funding strategies based on life cycle cost modelling to ensure sustainable performance, and prioritise targeted investment in high-risk assets, particularly ageing timber bridges, for those of you who have a lot of those, and also to those underperforming assets as well. So again, that's all in the data portal, and increase local road infrastructure funding by at least 6% in real terms in the next financial year and onwards. So that 6% equates to around $164 million. And I guess finally, also invest in internal capability to improve council's ability to manage risk, report performance, and long-term sustainability. And we do that in an informed manner. So again, thank you for your efforts in providing data for these most recent reports. Very much appreciated, and I know Josh and the team do value the work that you put in, and I've put some links on the slide here, which we'll make available after today's webinar. So I think on that point, it's time for me to head back to you, Josh, and answer any questions.
Great. Thank you, Steve, for that very comprehensive overview, well, not fully comprehensive, but certainly very detailed overview of the results of this year's report. Look, are there any questions for Steve that have come out of that? Please do pop them in either the chat or the Q&A section, and we'll get to those now. Steve, I guess while we're waiting for people just to pop something in there, I know we had a bit of a look at some of the previous recommendations from last year's report, or sorry, the 2023 report. Did you want to comment at all broadly on those, or?
Yeah, happy to do that. So for those of you who are familiar with the previous benchmarking reports, and the one before this one, 2023, there's a raft of recommendations, not only for Roads and Transport Directorate, there was recommendations there for the Office of Local Government, and there was also recommendations for local councils themselves. The ones for local councils were more around, again, what we've identified in this report around ensuring their financial plans aligned to asset management planning statements, make sure they've got closer integration. That's the results are sort of telling us, there's a slight improvement, but still remains unaddressed. But this there's been sort of gaps with making sure we've got up-to-date plans as well, which is it's a mandate under the IPWEA. So, but with the OLG recommendations, there's areas around reporting and compliance, some of which as you're probably aware, they're under a process of review at the moment. Some of the performance measures are being looked at as we speak, and we're quite happy to have conversations with OLG to progress their review. So there's some of the areas that we've revisited as part of this report. So I thought it was wise of us to revisit past recommendations. and see if any progress has been made. So all the detail is in this latest report. So I'm not sure if there's anything you want to add to that, Josh.
Yeah, I'd probably just add, Steve, that the intention is moving forward, we will continue to track those recommendations over time, and I think that's going to give some additional value to the report, rather than it be something that we might put out in one report but not necessarily follow up on. So there'll be that continuity moving forward, and I think that'll be added to as new recommendations come online. Now there is a comment or a question from Helen. Just wondering if Oberon has submitted data, and Helen, I can confirm that Oberon did submit data. I'm looking at the table of participation here, and there's a big tick next to your name, which is great. As you may know, many of us west of the mountains struggle in the grant system due to the competitive market, and there's some good information in this report to help ask valid questions. And there's a comment about the Genolan Caves Road, which I think anyone in the Central West is well aware of that. So, Steve, I don't know if you wanted to comment on that at all.
Yeah, good old Genolan Caves. Haven't been there for years. Absolutely, Helen. So yes, Oberon has participated in the most recent round, so thank you. And anyone can log in to view your data through the IPWEA Plus data portal, and just go to the benchmarking tab. You'll see your organisation, your council's data in there, and you'll see previous returns as well. So you've got access to your data, because at the end of the day, it is your data. So the question around grants, yes, grant funding tied to specific projects is somewhat problematic for the conversation around financial sustainability, because it does put councils in competition with each other as well. So that's probably more of an advocacy angle. I know IPWA has been quite vocal around more of a shift toward untied grant allocations, so councils can then attribute those untied funds from other levels of government to where the greatest need is, as per their asset management plan. But the reality is, at the moment, we don't have that luxury, unfortunately. So I think that was touched on in the most recent New South Wales financial sustainability inquiry as well. So, yeah.
Yep. No, I just echo that comment, Steve. Certainly from a New South Wales and ACT perspective, we're advocating along the same lines, that an increase in baseload funding, I guess, and reduction in competitive grants is the way to go, just to build that capacity within local government. And quite timely, given we've got the Congress coming up on Monday, that'll certainly be raised at that forum in front of the ministers who will be in attendance. So, Steve, I think that's the only question. So, and noting that we've only got we'll see you there, Helen. We've only got a couple of minutes left, so we might wrap it up there. Thank you very much again for your time here today, Steve, to present the initial results. And yes, hopefully a few of those on the call will be at the Congress in Sydney on Monday. Just a quick preview of our webinar for June. We'll be looking at the Asset AI project in a bit more detail, specifically focusing on a report that we published in April, looking at some of the benefits the councils that are on that trial have realised. So Nick Haviott, who's our project manager on that one, will be leading the discussion. That'll be on the Wednesday, the 18th of June. So I hope to see you all there. And thanks again for your attendance today.
Thanks, everyone.